Today I'm going to talk about the bogleheads out there. The people who call themselves bogleheads. And apparently this is a term that they refer to themselves as a kind of in the Jack Bogle cult of index investing. Now I'm not going to speak for all of the bogleheads out there because I haven't taken a survey, and I think it depends upon where you are, where you run across these yahoos, some of them yahoos basically. But I can tell you the ones on YouTube that have YouTube channels or that follow people on YouTube, they're fake bogleheads. They're not legitimate. Why do I say that? Well, and some of them don't even realize it, by the way. They're too young and too ignorant to know. But if you call yourself a boglehead, I think that you'd be an idiot to not look up exactly what Jack Bogle stood for. And of course, a lot of people just want to belong. They want to belong to a group because they're insecure, so they don't look into it. Jack Bogle believed in investing in the stock market index, the S&P index. He believed in index mutual funds. Now later on, when ETFs came out many decades later, and he didn't like ETFs for the simple reason that you can trade them. They're more liquid. The whole point, well, one of the points, I guess, behind Bogle's strategy was to just buy the market, buy the S&P index, and hold it. ETFs came into the scene and changed the game. And of course, they've been a disaster for more than a decade, in my opinion. They've gotten way out of control, and they continue to get out of control. And it's not just these ETF products. You've got, as you can imagine, countless websites, commentators, providers of so-called research, whatever, promoting ETF trading and sector ETF trading and all that garbage. If you're a boglehead, it means that you subscribe to Jack Bogle's investment philosophy, and that means you buy the S&P index, or you can buy an S&P ETF as long as you don't trade it and you hold it. That's it. And what that also means as a huge bonus is that you get to live your life. You're not wasting much of your life, your free time, listening to smoke and mirrors nonsense, garbage about why the market moved up or down every day, or what's a good investment. You can live your life, right? You can enjoy your life. But of course, there's an enormously large industry devoted towards getting people sucked in to the stock market. It's the financial media. And when you think about that, think about YouTube. It's the lowest level. It's the lowest hanging fruit. YouTube is media. It's ad-based garbage. And whether these content providers out there realize it or not, they are all contributing to the misinformation and the promotion of stock trading when the vast majority of people shouldn't be doing that. The vast majority of investors should be in an index fund, the S&P index fund. It's that simple. Now, I'm not going to speak for people living in other countries. I'm speaking about people in America or American citizens. Jack Bogle also didn't like international investing. He didn't like international index funds. He didn't like funds like VT. I just recently came across this because I didn't really know anything about Bogle, but he basically said the same thing I've been saying. It's not rocket science. It just requires some understanding and perspective, and that is companies around the world in these countries face high risk of inflation, interest rate risk, currency risk, political unrest, so on and so forth. That's the bottom line. International investing is more expensive. Those costs add up over time. And largely, depending upon the countries, certainly emerging markets are much more volatile. Now, he didn't talk about that. I don't think he understands that aspect of it. But I pointed that out in the video I made as to why VOO, the S&P index ETF, is better, much better than VT, and will continue to be. It has to do with what's been going on in the macroeconomic landscape with emerging funds versus the advanced markets, specifically America. And not all advanced markets are doing well, right? You want Japan in your investment index? Good luck. You want China? Good luck. You want the Philippines? Good luck. You want Thailand? Good luck. You want Turkey, Italy? Good luck. Portugal, Spain? Well, just buy VT. If you want those countries, and there's many others, many of which I've named, many of which have problematic economies, and I'm not just talking about this year, I'm talking about recent history, even longer history of problems for a variety of reasons. Stick with the leader. Stick with the country that has the most transparency in its capital markets, the most liquidity, the country with the best rule of law. When you have rule of law, you have accountability, you have oversight, you have proper regulatory authority to make sure things go well. You're talking about the country that leads the world in innovation. If you want international exposure, you've already got it with the S&P index. 45% or so, maybe 46 even, and it changes, 45, 48, 49% over the years, up and down. 45% or so of the S&P revenues come from overseas, outside of the U.S. And we're talking about the international operations of companies like McDonald's, Apple, Microsoft, IBM, Intel, NVIDIA, Kimberly-Clark, Bristol-Myers, Merck, Pfizer, so on and so forth. Powerhouse names. You've got plenty of exposure to foreign markets with those companies. So, if you don't understand all this, I explained in more detail in that video with VOO versus VT why this has not been the period to be in VT, and most likely there will not be a period, in my opinion. I don't foresee any period. I'm sure at some point things will change. They usually do. But I don't see a period where there's a sustainable change coming. There was only one period to have a good amount of international exposure with respect to a long-term buy and hold. Right? And that was an extreme situation when China entered into the World Trade Organization in 2001. And when that happened, of course, there was a domino effect. And that was only a few years after NAFTA was passed. And I believe, in 94, 93, 94, right? So that was the period. Turn of the century. Up through roughly 2010, 2011, 2012, depending upon the country. Things have changed. And of course, even if you were in, let's say VT, when it began, I think it began in fall of, I'm not in front of a computer, I think fall of 2010. I want to say like the end of September 2010, something like that. That was really actually the worst timing for VT to begin. Now, if VT began in 2000, I think the performance would be significantly better. Would it have beaten the S&P through July 2022? I'm pretty sure it would not have. So, if you're a boglehead, and I believe, by the way, Everybody on YouTube, everybody going to YouTube for investment, financial information, insight, investment ideas. If you're going to YouTube for that and you think that you're learning something, I will guarantee you, you are absolutely clueless. And remember, investment knowledge, insight is relative. You might be learning a massive amount of information, but compared to all the participants in the market, you don't know anything. And the market's a zero-sum game. You're competing against everybody else. So it doesn't matter how much you learn. You've got to have a competitive advantage. And there's many types of competitive advantages. I'm not going to get into that. If you're on YouTube seeking out investment ideas, investment analysis, trading ideas, investment insights, investment education, write it down. You need to be in the S&P 500, and that's it. And you'd be much better off. You will have a much improved life if you just buy the fund, hold it, and stay away from all media, stay away from YouTube, anything pertaining to the economy and finance. Go live your life. Because you're going to underperform the S&P and you're going to probably blow up and lose a lot of money. Now, there are certainly advantages for people who are in actively managed funds or actively manage their own accounts, aside from performance. For instance, you're able to strategically create gains and losses, capital gains and capital losses for your overall tax situation. So you can offset gains elsewhere with losses in the stock market if you want to take those losses. So there's a lot of advantages. And that's why, of course, a lot of wealthy people, I can tell you the majority of wealthy people are not invested in index funds for many reasons. That's just one very simple example. And of course, there are funds that do beat the S&P. There's actually quite a few. The question is over what period? And it's kind of funny, I'll just go ahead and mention this now. Warren Buffett hasn't beaten the S&P over the past 15, 16, maybe even 17-year period. If you compare Berkshire Hathaway versus dividend reinvestment of the S&P 500, which you have to do, since Berkshire does not declare any dividends. It actually, if you look at the top holdings, take a look at most of the money in Berkshire. Where is it? It's in dividend-generating equities. Take a look. I haven't seen it, but I know what he invests in. Basically, he invests in the big name companies. He doesn't provide income, a dividend, although it's supposed to be a value fund, which is bizarre. Doesn't make sense, but I could go into Buffett all day. He's very overrated. He made all his money in the 60s, 70s, and 80s. And a lot of that, perhaps most of it, was in private deals. And the money made during those periods was much easier because you didn't have competition. Not a whole lot of funds out there. And also during that period, value investing was true to its form. And in the private markets as well, that's where value investing and valuation methods for value investments are more accurate because they're outside of a marketplace, an auction marketplace like the stock market. Of course, value investing has diminished over time in terms of its importance for a variety of reasons. I'm not going to get into that, but that's just a fact. And Warren Buffett his performance has continued to decline over the years. He outperformed tremendously many, many decades ago. You could argue his fund is not even comparable to the S&P 500. It's actually a hedge fund / private equity fund that takes on a lot more risk than the S&P. So is it even a proper gauge? I don't think so. But nonetheless, it's much more of a gauge than a lot of these hedge funds use as a benchmark of the S&P, it's really fraud, in my opinion. That's a whole other topic of discussion. I've discussed that in the past, actually. So back to the Bogleheads. First and foremost, if you're a Boglehead, you need to buy S&P index and hold it. That's it. That's it. You can buy a mutual fund or an ETF. Now, the thing is that I think one of the reasons why people have piled into the S&P 500 ETFs is because they're more easily accessible. I can't speak for today because I don't have an account with every single brokerage company, but I do know in the past, not every brokerage company offered Vanguard funds. It's that simple. And probably it's the same today. But you can buy an S&P index ETF through any brokerage company. Why? Well, because the ETFs are listed. They're listed like stocks. You have to have a vendor relationship with the brokerage company. If you're a mutual fund company, there's a vendor relationship. So that reason alone is why people have gone into ETFs. The problem is that once they learn that they can buy and sell those ETFs throughout the day, and of course they're learning that because you've got people out there encouraging them to do that. You've got an entire industry devoted to that. Financial media, it's garbage. Once they learn that, then they get into this whole trading mode. See, so Bogle had it right from the start. That's why he didn't want to launch the first ETF. He was approached in the early 90s. He didn't want to do it. Eventually, Vanguard kind of got into that business because they were forced to. Everything was going that way. State Street was controlling the industry with the ETFs, and then more recently BlackRock. And by that time, Bogle was already exiting the company. Bogle never liked ETFs. He called them bogus. He called them bogus. And now you see why. Because they promote trading. And the vast majority of people should never trade. He also called international investing useless. And I'll go one step further and say I'm not going to say dangerous, but I'm going to say very risky. And it's certainly more than useless. It's detrimental. There are times to be in certain markets, or even just broadly emerging markets, and there's times not to be in those markets. They're very volatile for a variety of reasons. So the bottom line is this. If you're a boglehead, what are you doing on YouTube watching channels that promote stock analysis and stock trading and whatever? You shouldn't even be there. You're promoting a bunch of hucksters that don't know anything, that are conning you. Second thing is, if you consider yourself a boglehead and you've got a YouTube channel, what the fuck are you doing? Make one video, talk about what it means to be a boglehead, which means you buy the market and you hold it, and that's it. You don't buy individual securities. You don't try and analyze securities. You don't try and trade. You're not going to find that on YouTube. You're going to find people that call themselves bogleheads that use that as a hook. That's their hook. And then they engage in a bait and switch. They got you. Oh, they're a boglehead. They say they're a boglehead. They pitch index funds, and then they're analyzing stocks. That's more than deceitful. It's disingenuous. It's fraudulent, in my opinion. And then, of course, finally, if you consider yourself a boglehead, you should not have international exposure. It's that simple. It's that simple. Jack Bogle did not like international investments. He realized the risks. Interest rate risk, inflation risk, currency risk, political uprising risk. I mean, we were talking about much higher risk of these factors than in America. No doubt about it. And, speaking of currency risk, take a look at what's going on right now. The dollar's soaring. Most of you, I don't think many of you even understand why. And you're going to go and you're going to read the financial media and they're going to tell you a bunch of baloney. I'm not going to discuss why because I don't want to educate some of these YouTube fake investment gurus. Think about what that's doing. We've already seen how it slammed IBM's earnings. Think about what that's doing to companies overseas. Foreign companies, not U.S. subsidiaries. Okay? Stick with the best. Stick with the strongest. Stick with the greatest. America. American companies. American brands. It's that simple. It's not rocket science. Now, if you have a problem understanding that because you've been brainwashed by financial media, oh, emerging markets, that's where you're placed to be. Hey, dildos, I live in these countries. I live in the fastest growing countries in the world. Well, I don't live in India. I don't know if I can handle India. But I live in many of these countries. And I visit these countries. I see what's going on. It's not what you think it is. Stick to the best. If you're a boglehead, then you need to stick with Jack Bogle's strategy, and that is buy an S&P index fund. Mutual fund preferably, or an ETF if you've got the discipline not to trade it. No international stocks, no trading. Don't try and think you can out-analyze the pros who have insider information, a vast amount of human capital, resources, everything. You can't do it. And all these knuckleheads, these fraudsters on YouTube with their discounted cash flow. Folks, that's bogus. I'm telling you right now, who are you going to listen to? Me? 3 decades professionally in the investment world, one of the top investment analysts and strategists in the world, who predicted the financial crisis in detail, more so than anybody in the world, a guy that's worked in various aspects of the capital markets, merchant banking, private equity, venture capital, advised Fortune 100 corporate treasury departments, advised hedge funds, multi-billion-dollar hedge funds, multi-billion-dollar mutual funds, endowments, pension plans. I've got a pretty good knowledge of what's going on. And this discussion doesn't help me one bit. My point is that I obviously there's no incentive for me to speak this truth. I'm doing this because most of what I do and most of what I've done since I've run my own research firm, most of my efforts and time have been spent on public service and informing people about the fraud out there, the media fraud, and now we see all the YouTube fraud, and discussing what's going on. And if you don't believe that, then you don't know about my content and what I've done. You really don't. So I don't have any incentive here. I'm just speaking the truth, hoping that maybe 1 or 2% of these people out there that hear this will be wise enough to accept it and just buy the index funds, stay away from anything in the media related to finance, investments, investment education, anything like that. You don't need it. Use that time to build a better, more prosperous life for yourself. And prosperous, don't think about money. If you're focused on money, I don't think you're going to have a happy life. Prosper, we're talking about your family, your friends, your society, your experience in this life, what you're doing for people. Right? What have you done? Once again, folks, in summary, if you're a boglehead, you're buying the index, you're holding it, that's it. You're not paying attention to all the drama, the daily drama in the financial media. You're not listening to people analyze stocks. You're not looking for some type of edge that you're not going to get. Look into Jack Bogle. Look what he says. You're not buying international indexes. You're not buying any type of U.S. index that has international exposure other than multinational corporations in other countries, right? You're basically buying the S&P 500 index. It's that simple, folks. If you're not doing that, you can't call yourself a boglehead. You're slandering the name of Jack Bogle. You're distorting the name of Jack Bogle.